does everybody in the world seem so divided? Why's everybody gotta hate each other? Who decided? If I took all the world's pride and all the world's money and wrapped it in a blanket and put it in a buggy, could you see that maybe that baby was just the same as you are? You know it's never been easy. Every day for everybody ain't breezy. And I hope you realize when you look into another person's eyes, you know today would be a very good day just to have a good day. You know today would be a very good day just to have a good day. With a little more love and a little more laughter, a little more good vibes, less disaster. You know today would be a very good day just to have a good day. All day long. All day long. Good days, please come more often. Everybody's in the streets out coughing. Smog in the air, gonna send you to your coffin. Plastic everywhere down there with the dolphins. Everybody was born to a mama, so everybody is connected like karma. So disconnect yourself from the drama. Everybody's trying to heal like trauma. You know it's never been easy. Every day for everybody ain't breezy. And I hope you realize when you look into another person's eyes, you know today will be a very good day just to have a good day. You know today will be a very good day just to have a good day. With a little more love and a little more laughter, a little more good vibes, less disaster. You know today would be a very good day just to have a good day. And I say, hey, hey, put all my troubles to the side. And I say, hey, hey, thank God that we're alive. And I say, hey, hey, put all my troubles to the side. And I say,
CTM. What's going on, everyone? I hope you're well and doing great on this Thursday. Justin picking up on it. I've been trying to keep it positive and upbeat here as we're in this, let's say, whether or not just the stagnant situation. It's like stagflation here for the cryptocurrency market. You know that CTM 2.0, we've been on the sidelines for quite a while. And you could see that there hasn't been much action at all. And I've been trying to keep us positive and upbeat and get through this period so that we could return to, hopefully next, some honeymoon instrumentals, right? And then Justin, I can't wait for the day that the honeymoon vocals return. That means the bull of all bulls is running and the atmosphere will be electric. There's no question about that. I hope that we don't have to return to just like alpha wave music work sessions, but we're gonna put it all together. I think we got a fun session today. So without further ado, good morning, good afternoon, good evening, CTM summer sessions. Let's get into it. This is not important today, but I'm just going to point out that it does look like that we are holding the breakout. I should extend this later. I want to see what that looks like on the candles really quick. And we're still on the outer edge. It's still very iffy. We know that we have this trend line over here. This is what I'm going to call right now, obviously, the U.S. banking crisis. And then it's the SEC, Binance, Coinbase, and if we were to lose that trend line, we'll see what comes next. So I'm going to review this chart really quick. I mean, I really want to hit a little bit on the NASDAQ, and I want to hit on stocks. We're on the sidelines, except for Cardano's holding a short position. And we'll look at, for a very slight perspective today, discretionary, because what we looked at yesterday on Bitcoin discretionary, as price was coming back into the demand zone, that so far is the same thing. We'll look at that. We'll do our normal thing over here today. Hey, Snack, I was wondering about you earlier today. And I was wondering how you doing as far as, first of all, spending all that time to get really acquainted with what we're doing here and how we do it. And I know that you started during the heat of the bear market, right? Dollar cost averaging. And then you made some very smart purchases when Bitcoin was cheap, and or I should say under $20,000, and that helped you get your average price much lower. So I mean, I don't know what comes next. It's going to be a while before we're roaring in the bliss again. I think other people have some pretty tremendous expectations for what may transpire in 2023. I don't, but eventually the day will come when the bull of all bulls is running, and that will be a joyous day. I want to just review this with you all. This is a very important chart, and if you looked at it, I think that you would be like, well, yeah, that's a lot of scribble scrabble. That's a lot. So I'm going to break it down really quick so that we could hit off it. And over here, what you're looking at is three trend lines. There's this one, which was the famous bull market breakout, right? This was getting as many people as possible, just help make the bullish case for Bitcoin and get them to accumulate into Bitcoin for what was going to be the next cycle. That next cycle broke out during the summer of July 2020, live on CTM live stream. We called the bull market breakout. It was a hold your breath type moment when we came in for the retest of that trend line. It did wind up holding and breaking out, and a lot of people were coming from traditional markets. And when they saw price rise from that $10,000 to $14,000 in a heartbeat, they wanted to take profits. We're like, no, 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 no. This party is just getting started. Hold on. We came into that $19,000 area, and then we had a pullback. We were looking for a bigger pullback at that moment. But once the price action went ahead and nullified it, we were like, you got to hold on. Where you got risk ace. This was the first risk is to the upside call. There it is right there. And then the rest is history. And then you have this. This is from the last bear market. I'm sorry, the last bull market, 2017, December all-time high. And then this trend line connects what was the March and April 2021 all-time highs. If you take those two lines and then you make a parallel channel, like I'm just going to go dink to dink, and then I bring it down, right? You can see where that bottom line then comes in. Oh, I might have just messed up the whole presentation. All right, no, we didn't. So that's why this line is down over here. Okay. And that's coming off of the lows of the bear market in 2019, December 2018, January 2019. And then really in COVID, this is this wick below, but this is where price kind of stabilized. And if we break down from our bull market breakout, that could come into play. That right now is somewhere right around testing the lows. So head snack and others, and why it feels good right now to be nicely into profit, maybe even 50%, right? If you're dollar cost average in or something like that, we could head back there and lower. If you take this trend line and you clone it, so it's the same exact angle, and then you put it off the bottom touch over here, that would look something like this. All right. So this boulder trend line down here, this is the trend line we have on the chart right here. And if you were to clone it and put it off that one touch, this would be this one down over here. So I think that if we were to have right now from where price is, if we were to have any type of credit event and some type of trouble, maybe we come down and we test those lows, and that likely holds. But if it's something a little bit more crazy like we saw back in March 2020, there's a little bit of a room. So that's that room down over here. And if that were to happen, I think that would be just an incredible buying opportunity, and probably one much like we saw during March 2020, where it's kind of a close your eyes and jump type moment, which often winds up being some of the best investments you can make long term. But at the time, it's not easy to make it at all. Like if you were there and I was there and I did it, and I remember very clearly, it's still not like there's nothing guaranteed whatsoever. We saw oil trade negative, if y'all remember, back into the spring of 2020. So, but the further that we go into time, right, you could see that as we get further into the year and around the halving time, then the chances of testing this low become less and less and less, because if this is upward sloping. All right, bringing it back over here and getting into what comes next. I want to go and show you this next trend line, because I'm trying to show you what the scribble scrabble is so that we can even take it a little bit further for where we are today in price. So I have over here the high of June 2019, and then again connecting to those highs. Again, you take a parallel channel off of the low, right? That's that March 2020 low, and then you can see it over here. That's why that's there. And I'm taking another parallel channel and I'm cloning it, that same exact angle, and I'm throwing it off the current bottom. And that's why we call this the bull market breakout invalidation if that were to break. I'm going to add in a couple more things over here before we go forward. And I'm just adding in during the bear market, our first technical breakdown, 53,140. We weren't looking for it. We didn't see it, like, I won't say we didn't see it coming. We called it as it happened, but we weren't, that's not what expectations from myself was. This thing was going to blow. We never had the blow off top. Then over here, I have this trend line over here. I'm going to show you why that's what we did, 35,000. It's probably not correct, and I'll show you why in a second, but that's what was done in real time. And then this 27,000, remember this one was if you haven't de-risked, like now's the time. And then 27,000 was the last call of, listen, this is going to get worse. That's exactly what happened. And now we have another one of those. If we were to break down from this trend line, then likely we're going to see a further correction. Now, it's true. We looked at it and we don't know what's going to happen. By the way, what we are looking at this suppressed volatility currently, and we're looking at, you know what? It could get even further suppressed, and that could be for a looking into the halving, right? We could have not just one periods of these, we could have two long periods of these. This is kind of why we're trying to keep the mood up over here with it's a good day to have a good day, because it certainly is. If you jump over to here, I'm going to come to this in a second to show you why I said that 35K was probably wrong. But I want to start over here and just point out that it remains the same for me, that I believe that a good estimate of where price is around the time of the next halving, and if it's 35,000, that's super great. If you look at the past two cycles and you see where price was at the time of halving, it happened to be from where our yellow trend line is, the angle that we use over here, and coming off the high price point. So in the past cycle, that was, right at the time of halving, right there. It did go above, but it ended right there. Same thing right around there on the second. So I'm looking for right around here. If this was an anomaly, and I don't think it is, then, I mean, is it possible that we're at the lower one? I guess, but I digress. Let me come back and continue here. And let me add what's in next. And that's this trend line over here, right? And I think that if we get lucky and we break down over here, this would be a good place for us. And we talked about very recently this week, if we broke down and taking out that SEC, Binance, Coinbase, BlackRock saving the day with the announcement of the spot. If we take out that low, you can see that's a downward sloping trend line, right? It's a downward sloping trend line, so that would be really neat. Then I have this trend line over here, the last trend line. And the reason that trend line is there is because that goes off of taking the angle off of the low and then that trend line over here, right? So again, if we were not to hold on that kind of double bottom, taking out the low, downward sloping trend line, this is assuming that, the low is not in here. I hope it is. And whatever. I'm just trying to prepare ourselves here for potential downside and give everyone just a overview of what all this scribble scrabble looks like, because it's very important, right? And then if we were to break this one at that point in time, yes, we could be coming in to test the lows over here. And And that would be what we just looked at coming into this trend line over here. So that's a pretty good downside expectations of what could possibly come. The one thing I didn't talk about, and it could, is that when we've broken those trend lines in the past, and here's like the trend line, and that's a poor looking trend line. Let's bold that up a little bit and show it like a little bit, that we have entered it into a flat consolidation zone. And this one here, barely even flat. That's just up. So is it possible that that last one I just showed you, if we were to break it, that we enter into one of these periods? Yeah, but we could also enter into one of these periods, which is, hey, something breaks. That's just the reality of the situation we're in. And what is next? This. So let's take a look at this trend line over here. This is the one connecting the April high into the November high. So that's different than what I have over here. I was going to do this. Let me do this first. And I'm going to borrow this trend line over here. And if I were to place it right here, trying to get a good look. I'm trying to find over here where it works out, but it doesn't. It only works out over here, from here to here. And then you could say again over here and over here. That's not a good looking pattern. I mean, it's just not. It looks to me like this is if that breaks down, it doesn't look good. So, but this looks like it's been resistance, right? You could see from this period over here, this touch here, for sure, resistance. So that's interesting. I'm going to just borrow this again and bring it down to kind of where we are right now. I don't know if that offers us any type of, or if it's just too noisy. I don't know. I'm just looking to see if we broke down from here. Maybe we find support there. I mean, there's a gazillion lines everywhere. I don't know. Ultimately, I don't know. So I digress on all of that. And that was just the brief explanation of the scribble scrabble and what we got there. The truth is that there are a gazillion lines. Oh, where I got it wrong. This line over here, I'm just going to bring this back up over here, and I'm going to show you coming off of, well, these two touches here, and there's the third there, and then the touches never close below. It's a little bit earlier, right? This area over here is like 37, around 37 and a half. It's earlier than 35. So I feel like that maybe that would have been better. And if you do this on your own and you just go ahead and you look at all the times that this angle breaks and price breaks below it, you could see why that the caution if we were to break that trend line here now today. So that's our little bit of a fun overview today and where we're at, and important to keep us on track. Let's take a look at what's going on here on the NASDAQ. And if you remember in yesterday's analysis, we extended this trend line over and we just said, let's see. I have no idea. Let's see if this breaks, and notice how this trend line, 1, 2, it priced normally first, I should say, found support here. It bounced. Discretionary traders, that's a bad looking candle on that bounce. And then once that low was taken out, it did then take us into the support. I mean, that's plenty of so it's a highly tradable event for those that are on the smaller time frames. The highly tradable event. But we did, and we didn't, again, we don't have a crystal ball. We just said let's see. It did so far hold that support. We're bouncing off of it, and now we're coming back up into this, what was an area of support. And let's see if that holds as resistance and we go sideways for another look at this, or whether or not we're back up into this zone over here. Brings me back to this, and I think this might complement a little bit of what Ace said over here. And if you remember yesterday, in yesterday's session, we were looking at Ben showing what August looked like coming into a presidential election year. and price comes off a little bit. If
Performance
you look
report.
at
So
this
a lot of
video over
names
here, I'm going to
reporting earnings
come
represent like a Saturday or
right over here. And this is, again, August. This is the Trader Almanac showing that same price movement. Up in here in red is the NASDAQ. And you can see it does come off a little bit, but not too much. And by the end of the month is usually coming back out of it. The one down over here that gets hit the hardest is the Russell. So if you were looking, that's not the Russell. This is the Russell. Sorry, that's the Russell. Oh, that's the Russell 1K and 2K. I'm looking over here at the map over here, and this says Russell 2K pre-election. This says Russell 1K. I can't find on the chart the other black, so I don't know if this is well. This is the Russell 1 or 2K, and you can see that gets hit hardest. And Russell, if we're entering into a growth period, that thing's gonna fly. I think it outperformed Bitcoin coming off the spring of 2020. That is gonna fly, but when you're looking at potential slowdown, that's gonna get hit hardest and quickest. So expectations are that we may not go sideways. But look, it's a good video or a good view. The portion you pointed out complements Ben's recent attention to the August during the pre-market years. If equities are under pressure, I imagine Bitcoin and crypto follow. The truth is, this is the part I want to highlight. Are we in a channel? I'm going to jump back. So with the channel B, is this what you're looking at? I'm just going to jump down over here and connect this high to this high and bring this down. And we could definitely make the case for it. It's pretty close. I don't know how accurate that is. Let me try to get it so we get as accurate as possible. And yeah, that's a great call. So that's looking to, first of all, great awareness. And I know that right now the historic seasonalities point to like bad new bears. I know the markets have come really far really fast. So hold on to those two thoughts really quick and let me build them in. The truth is, why early to the breakout of the NASDAQ, I don't have the correct chart to show you. So let me, before we look at this, just jump over and try to do that, because this is an important point I want to make here. And I'll use this because this points out the last time we were in a bull flag, Michelle. And, I think that was a good look at the potential channel that we're in right now. It looks like a perfect bull flag, great awareness. And you know, even better than this area of support that we hit into. It looks more cleaner to me, and it could have been in there beforehand, right? Because connecting these 2 points off of this one. So great, 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 great look there. And so when I say, truth. Why early to the breakout of the NASDAQ, and that's this part over here, and hold your breath. And then our next thing to do, right, was see the move up, right? And then we had this one when we inverted the chart. And at that point in March, the general sentiment was extremely bearish. It just warned if we break out from there that this could roll over. Then we put in where this is invalidated. But up here, and I'm going to come back to this part in 1 second. All right. So no way I expected the extent of this move up. And I've been looking for the potential rollover for several weeks. It may be coming now or not. Bull flag is a bullish continuation pattern. FNGU, Tesla, and TQQQ all put in massive mechanical gains during this period. And it really solidifies me to the edge to try to get it right as possible, discretionary. Like, try to be the best at it. It's really difficult. It's really difficult. And although this was a good call, and all this was a good call, from this point on, I was not expecting this. Now, Michelle did, and that's that collective collaboration. And Michelle did get us on the right side of that. right? And then a clear breakout. But even all that, I was not expecting the extent of that type of melt up. And that's where the mechanical edge comes in, because regardless of what your expectations, if it's happening, it's going to capture them. And if it's not, you're either taking small losses or outside of the market. So for me, that's a huge, huge, huge signal to focus in on. And speaking of, let's bring it up. Let's take a look at what's going on a couple of different things over here. And FNGU obviously out of the market. I just want to point out in 2023, the returns on the daily are as good, not as good, but almost on par with what the 1 hour has done. Right? Well, yeah, they're the same basically, right? And if you look at Tesla on the 1 hour in 2023, massive 71% gain. You look at Tesla on the daily, I mean, these gains are on par. And if you go back further, and if you go back and you look at what Tesla's done to 2020, now the 1 hour is going to outperform. Here's 1500 compared to, let's jump on Tesla. So we have 1500 on the daily compared to, boom. I mean, the gains are going to outperform. If you do on FNGU, the same thing, right? If I go back and I look at from 2020 and I look at 3200 compared to FNGU, I'm going to show you this in 1 second. I was able to pull up FNGU on the daily and Tesla on just the short side in the daily. And then if you look at Tesla at that same time and you look at FNGU. I was like, what am I looking at? What's going on? So we had 3,200 compared to 1,200. So 1 hour extremely outperforms. I think on the 1 hour on FNGU, you likely have to factor in the margin that you're able to access. So Tesla, you could kind of view it as, very equal, and the 1 hour outperforms. But I have to tell you, these type of gains on the daily are absolutely extraordinary. And the daily allows for very easy execution, very easy quality of lifestyle. Now, if you're able to run a bot and you're able to go ahead and trade it automated on the 1 hour and you want to do that and take those risks, obviously the smaller time frames is very accessible. To me, the daily is very attractive. I just want to point out how like some people talk about. I was watching this video last night on a mega Roth IRA, and then they're like, okay, this can be achieved if you were to have a 15% gain yearly on average, which is like 15% gain. That's insane. For people outside of our situation here, 15% return, that is, that's really, really good. We talked about yesterday, one of, in the market wizards, one of the longest track records, 22 years with a 20% return. Like that, most of the 200 and 300, or the only two that did that, their track records were only like 7-8 years. So 15% is ambitious. This is the daily time frame, and 3 years, 3.5 years, you're looking at. Anyway, point made. Let's take a look at this really quick, and that is FNGU on the daily. And I was wondering what happens if you look at Tesla on the short side on the daily as a complement. Now, the difference here is this is going to 2018. That's why the difference in return. And this is going to 2020, 2018 also. I'm curious just to see the difference in return. Okay, I'm gonna just go off of 2020, and we could see that if you go to 2018, it's the return is about 10% greater. But what I just want to point out is why that doesn't seem. Actually, I'm just gonna keep it here because the things line up better. Why that doesn't seem like a big deal, compounding against this, it's a great deal, right? We all understand what that even 25, 32% return does in relation to this. Now, if you look at the times that FNGU is in the market and Tesla enters, you can see at this when Tesla enters its short position, FNGU is out of the market. When Tesla enters its short position, FNG is out of the market. Over here, it's not the case, or actually the day it enters, this is out. But I think you would have to have a hard and fast rule. What happens? Like, what happens if they both get a signal at the same time? Or in this case, like, do you take the you have to make a hard and fast rule. I don't know what that is right now because this one is close to that happening. I looked back at the others, right? And here's another case when let me zoom in. FNGU entering the market, and yeah, like Tesla's entering why FNGU's in the market. So there needs to be some type. Now this one works out well, but not all of them. So it seems like 70% of the times it's a clean signal, and then the other times there has to be a hard and fast rule. And then this is like the beginning of the expiration. I don't know that of short Tesla daily is the best complement to FNGU, and maybe there's something else out there. So I would like to find it. I would like to continue work on it and see that if because yes, why 30%, 25% offers an incredible compounding complement. Maybe there's something better. So I'm going to continue toying with that and looking at that. That's something that's very important to me. Let's take a look at what's going on here. And we're seeing right now, thus far, Ethereum and Bitcoin remain neutral, and Cardano continues holding on to that open position. It's fantastic. Look at that. We're going on now. This is since 1 month, taking one trade and being on the sidelines. Similar situation over here. 1 month, one trade on the sidelines. And over here, similar situation. 1 month, one long trade. And then now in a short position. So, same discretionary situational awareness as yesterday. There's nothing even to add into it except that, well, if we could clear a point, the area of what was entry, right? You can see earliest entry marked over here. That's where we kind of hit resistance today. So clearing above that, then that, maybe we're going to get out of here. Now, if we break down over here, if this is stopped out and I have my stop loss down over here at 28,730, here's what I want to add for discretionary trading today. I think the best thing to do, and the I don't know what type of word I was looking to use here, but those that really are spending time working together inside the discretionary channel, which is absolute fire, right? And I like the ones that are in there and working hard at developing their skill and craft. I believe, as that work ethic continues and those gains are made, those gains of knowledge, experience, and awareness, that they're going to be highly successful. I believe that. But I also believe that if, and because each one of them want to get there, that is their desire. That is what they continue. Now, and pause, asterisk. I believe that 90% of them also, 90%, it's a high number, have for sure the understanding of CTM 2.0, the mechanical eng, and the vast majority of their funds active there. At the same time, look, there's always room for improvement to get better. And if you're working on your discretionary trading, I think the biggest gift asset that you can give yourself, besides all the qualifiers that we talked about that are already happening, is that you're taking very detailed, you have to have some type of way to go over the data. You have to be able to look at what you've done what exactly that, like, we're able to do that very easy on CTM 2.0. We have all the stats here from TradingView, and then we have like SIB and able to pull it up in different ways, and Sale Guy able to go through it and many different ways, and we could look at all the data. But you need to know, right, what your not only net profit is, what your max drawdown has been, but Sorrentine ratio, profit factor. You need to know your average trade, your average winning trade, and your average losing trade. And you need to know these things, because there's no way that you could then look back and see in your discretionary trading what is working that you could continue to improve upon, what you need to improve upon, what is hurting you, and go ahead and fix it. Because if you know, because maybe you're taking a take profit early, and then maybe you realize that your average win and your average loss, you have a 1-to-1 risk reward, right? I'm looking for average win, average winning trade, average losing trade. No, no, no. I'm looking for average trade and average loss. Well, there you go. I'm sorry. Average losing trade is, if it's a loss, it's a loss. So you're looking here and you're saying, okay, my average trade is on Bitcoin 8.79, and my average loss is 2.85, and that is somewhere around a 3.7 risk to reward. And if your risk to reward is closer to 1-to-1, then you know that you're likely cutting your profit short. All right. Bam, boom, bang. Let me get back over to here, and that's it. That's it. I think the only thing I wanted to say was this. So let me get rid of this. Let me pull up the daily. And that was, well, we already looked at it earlier in session. If we were to, my stop loss, that's what I was on. My stop loss is over here. And see, if we close below the green trend line, the green trend line is that important trend line that we looked at earlier in the session. So I think it's over here. I think it's over here. I think it's over. We had a good flow going up until the very end. That's this trend line over here, right? This trend line over here. That's this green trend line. And if we were to close below that, well, then likely we're going to be seeing a deeper correction. And I believe pullbacks are still meant to be bought. Now, CTM 2.0 would be beginning to attack on the short side over here. And that's enough for room to attack if that were to be a swift and sharp move. No question about that. My worst expectations are that we, as I just showed you and described, that we come in and just take out the lows over here. And I think at that time, there's likely that we resume up. Now, if that's not what happened and we break down further, that brings in this important line down there. But we got that. We got that all good. Yes, yes, but time is good. Like the more long term minded you are, when I say you, I mean all of us and everyone, the more successful you're going to be, for sure. FNGD, I tried to find a mechanical solution to, and I think I could only get 20%. Now Tesla's not that much greater. So that just shows you the short side. So then the other thinking, Michelle, for me was, well, why not on the smaller time frame on the 1 hour? But then on the 1 hour, you have the conflict with the daily and when you're in positions. So there's got to be a better way. We can do better than that somehow. So it just opens up the door to find a solution. On the long side, daily time frame, phenomenal possibilities. If we could move from a 25%, in a 3-year period on the short side and find something that offers a better way to be putting capital to use when out of the market, because you spend all of 2022, this is out of the market, basically. And which is fine. Long-term wins, long-term perspective, long-term mindset wins. Same thing with your discretionary trading. If you could spend if you begin as soon as possible, making sure that you have access to the data, then as the next 3 months go by, then you have some data to review. 6 months go by, 2 quarters, you got more data to review. 1 year goes by, not only do you have more data in that year, you have significantly increased your abilities, your understanding of what you're doing, your understanding of what works, and then viewing it along with the data is going to help you make tremendous gains. By year two, your improvements over year one will likely be substantial. So I spend a lot. Yeah, it's a good channel. Um, Especially for passing through the summer doldrums that we have over here, right? Yeah, this is a great line. That's a great line, Ace. That's a classic. Love it. Short side is hard. I'm not trying to contradict that in any way, shape, or form. Short side is hard, but if you look at our overall results on the short side, they're almost even. On Bitcoin, are they even? Hold on a second. Almost even. Now, if you're using short alone, it's not going to be the same, right? Short side alone, 139 compared to long side, 6. So, yes. Actually, I'm going to actually just even highlight what you're saying about and just even confirm that a lot more. And at the same time, that then shows what they do together. The compounding of that small gain when added together with the long side. So if we could find on the daily time frame a solution for when FNGU is out of the market in order to actually bring the alpha, it could be a massive improvement. No, you're totally right about that. It's you it, and I'll do also at the same time. I'll do Ethereum and show you the difference with the short side only. Right. So 978 long side only, a massive. Look at the difference, Michelle. Look at the difference. 1.5 million compared to 978. But that 1.5 million added with that little bit of short return compounds incredibly. Incredibly. So that's so counterintuitive, right? But amazing what that 168% gain on the short side does in compounding with the massive gain on the long side. It's incredible. So, but it does highlight how difficult the short side is. It does highlight how difficult the short side is. And that's the important piece there. And at the same time, it just inspired me. Ace is talking about the passion of the market is a great fuel for discretionary. That little bit tidbit at the end here inspired me greatly to really find a solution here for when FNGU or Tesla is out of the market on the buy side on the longer time frame. So I know what I'm doing today. Everyone have a beautiful day. I didn't bring up or talk about a lot of. Oh, by the way, I have to talk about this and I see hat tip Michelle in the 1 hour buy only. It was sending alerts here for selling FNGU position now short, so that needs to be fixed. And then this is at the highlight of my mind. It's a big job and it might not happen until the weekend, but very soon looking to get out the updated CTM version 2. Hat tip. Big up. Amazing work. Javier, so that we could, and Javier, look at that. Imagine that. Imagine what it was like with that incredible innovation, and then passing it off and handing it off to the CTM hive mind, and to see the fruits that popped up from that. And we look forward to forward testing all that on a regular basis together. Everyone, awesome session. Have a beautiful, beautiful day. And let's see what's to come. All right, everyone. God bless you. And I'll talk to you soon.